Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so we're going to do a quick market recap today because we do have some updates. So, looking at the dollar, we're going to start off with the dollar. Very nice consolidation. So, if you're looking for more upside, this is the sort of behavior you want to see. Okay, so it's still immature, but we are potentially building out a bullish consolidation because remember what I say, when you have price fly up, okay, and then you go into a grinding structure to the downside in this scenario, it opens the door towards bullish consolidations, bull flags of the sort, okay? So we are looking at that potentially building, but like I said, it is still immature. So I'm not looking for this to just pop on up next week. It's most likely going to continue to trade in this sort of structure for a while longer. Maybe by mid to end of next week, we may get some sort of validation or invalidation of this bullish structure. And if we do break up, like I've been saying, 108 to 109 is going to be the general area we want to see price get to on the dollar, which is the top of this monthly bearish fair value gap, and it's also the underside of the daily uptrend line it lost some time ago. So this area will likely lead to a failure zone. Now, it doesn't mean it's just going to hit here and then plop all the way down. Of course, it's possible, but that's not what I'm calling for. I'm just looking for this to get towards this level first, and then we are likely going to see price interaction here that will cause it to slow down, whether that means another bullish consolidation or consolidation that could actually have a bearish bias, we don't know, or it may just lead towards a reversal where we trade up here for a bit and then we start to break down, and then whether that reversal stays bullish will depend on what low it may or may not take out. So in this case, let's just say right here is the low, that we don't take this prior to breaking out here. This will become a protected low, and as long as in a potential reversal scenario the dollar doesn't take this low out right here, you can consider it still in an uptrend, okay? Unless the dollar does something like this where it reverses down after hitting this zone and then decides to start breaking down further and then takes out this low, then this entire uptrend here will then be at risk to have been done, okay? So then you'll look for a lower high and then continuation lower over time, okay? So we'll have to wait and see how price interacts if and when it should get towards this level here, okay? Next, let's take a look at the Dow. So we're going to look at the Dow, S&P, and NASDAQ. And wow, man, I gotta tell you, the NASDAQ and Dow and the S&P have been bearish, okay? And it's very odd, especially when you take a look at crypto. But, we'll get to that. So looking at the Dow, we took out the protected lows here, okay? And this cannot be ignored. So we took out this low here. We took out these low pivots here. So taking out these low pivots was a big deal. And taking out this low pivot here is a pretty big deal. So the trend that we were in, went too far back. The trend that the Dow was in, the little uptrend here, okay, that the Dow was in is breaking. Okay, this is breaking here. And now what I'm going to be looking for as we've broken down under this level here, and we've taken the sell side liquidity here, and we've come back to a key level, which is 32,440. What I would say is look for a move back up. However, this move back up is likely going to lead towards a lower high once again. So we're going to be looking for a move back towards around 33,600. And maybe if we get a lot of fuel on that move, the move back towards 33,850. But once we get to that zone, we will likely fail back down and even go lower and potentially go after this low down here at around 32,000 to 31,500. So this zone will be the red line to protect, to try and keep away from these lows we made back in 2022, which were the year lows in 2022. So this is a big deal, guys. If we can't protect this over here, that's pretty much the game. And we might be looking at a real bear market for the U.S. equity market, judging from the Dow. All right, so it's a big deal. We're going to get rid of this doodle here because unfortunately, price could not hold a bearish retracement structure. We were looking for it to break down from here, which it did, right over here. And we were looking for it to pop up near this fair value gap, which it did. Didn't get as high as I wanted it to, but it got back towards the reversal, the bearish fair value gap here. And then it broke down, and I was looking for it to make, slight higher lows, and that did not happen. So this track is dead. So we're going to get rid of that. And now my bias for the Dow is definitely flipping more bearish than bullish. So we may be continuing the ultimate macro bear market trend after this rise here. Okay. Next is the S&P, and it's a similar story, right? So S&P came towards the 1 week bearish order block, failed right off of that, and pretty much followed our path to a T. I was looking for, hopefully we could get some buying here, not to hold this low, but to at least create a consolidation to slow the selling, but that's not what we got. Now we're making our way back on down. We're going after this consolidation, and these lows are likely going to get taken out. This is a very heavy drop, and it's likely going to bring us all the way down back towards 4,000 to 4,050. Okay, so back towards this 1 day bullish fair value gap that has not been mitigated. So there is plenty of reason for us to come down here. A lot of liquidity under this pivot, and this fair value gap has not been mitigated. And we will likely see price interaction here similar to the Dow, where then we'll pop up, but only look for a lower high. It's very unlikely for us to immediately pop on down here and then look to take the high here. Okay, for that to happen, there'll have to be a lot of fundamental changes in the economy, or at least in the central bank policy, or some sort of big change in the U.S. equity markets. But as of now, just looking at this from a technical point of view, it's more like we're going to do something more like this and make a slight lower high, whether it's right here or right here. Okay, so we'll see something more akin to this, and then if we're going to go into a much deeper bear market, we'll definitely take out the lows here, and then we'll go after these near equal lows in the sell side, the 1 week sell side liquidity. Or if we're just going to kind of hold out here and build out a larger structure that might end up being bullish, we'll have to wait and see. But as of right now, I think your bias should be towards more downside in the midterm to long term, whereas in the short term, as we come into these levels, you might want to reverse short term bullish just to see some upside from a nice little pop-up after taking that liquidity. All right, next is the NASDAQ, and again, similar story. NASDAQ actually is playing out more akin to what I've been kind of seeing. I didn't think the NASDAQ would have as much protection to the downside as I thought the Dow and S&P did, which they proved to not. Mainly because unlike the Dow and the S&P, the NASDAQ was far more extended. Okay, far more extended, which makes sense just considering what it follow. What's within it. Tech mostly. So it's going to be a lot more volatile in general. But as you can see, we failed off of the fair value gaps here, and now we're making our way back to the orange zone, which we have circled here. We'll get rid of that, clean up the chart a bit, and now we want to see continuation all the way down towards this fair value gap down here, and really tapping towards the top side of this big green zone here. And then from there, I would want to see a pop. So similar to what's going on with the S&P as well, we want to see it take some of this sell side here and then pop up and make probably another lower high of some sort. Okay, so it's either going to happen here, which is kind of what I have shown right here, or it's going to happen down here and we'll come back to the orange zone. So either way, they're each going to lead to lower highs, most likely, and we should then look for downside going all the way down towards around 11,500, and then maybe even lower, depending on how extended this bear market's going to be going into the end of the year. Okay. All right, next is oil. So we're going to take a quick look at oil. As you know, I've been bullish oil for a long time. I'm still bullish oil, and I got some bad news. I think oil is ready to have continuation. There are many people who think oil's done. I don't think oil's done. Until I see this low right here actually get taken out, 77.68, I'm not going to change my stance on oil for being bullish. Okay, I'm bullish. Until that starts getting taken out, I'm not going to really change my stance. And then fundamentally, I think the world is set for a expensive oil. I do think, unfortunately, that the war is going to continue to escalate in the Middle East. I do think, unfortunately, and I don't wish this, but I pray for you if you are in the area. Syria will become more and more intimately involved, and I warn you that Syria will face a lot of pain going forward. And that will cause oil to spike for a lot of reasons. One, because obviously war causes oil to go up, but if you understand the Russian oil pipeline, Syria is intimately involved in that. So this is going to be a really, really hard time in the world. And I think the war is just going to perpetuate that even more. So be on the lookout, as unfortunately Damascus will likely face massive pain and potential destruction in this coming conflict. You will see oil spike up in that. And I pray I'm wrong, but the charts are telling me to not be bearish, and it is best to be bullish in this scenario. So watch for it to continue to virtually follow my doodle, which it likely will. We made this point here. Now we're making the cup, and that's what I think we're doing here. We made the point here, and now we're going to make the cup either here or down towards here. As long as this low here at 77.50, we'll say, doesn't get taken out, the uptrend from this shift down here is still healthy and viable. And pray for everyone involved. Seriously, it's a tragedy all the way around. Next is gold and silver. So let's take a look at gold and silver. So gold, very bullish reaction here. So look at this. I've talked about it a couple times where we came back towards this zone and then pulled back down, came back down towards a very key area, 1816 to 1807. I mentioned it very often in my past recaps. This is going to be a zone you want to watch out for. V bottom. And not only that, we immediately took out these equal high pivots here, and we actually took out this pivot here. So what I'm telling you to expect with this clean up this doodle is look for a consolidation of some sort that's going to likely have a bull bias. Okay, now I will watch this closely. If that does not end up forming and we do end up building something bearish, I will immediately say. But right now, I'm looking for something more akin to this, where we do have a more bull flag sort of structure, because once you take out a consolidation that actually did have a bull bias, right, something like this, okay, where you popped up really hard and then you're grinding lower, this is going to have inherently a bullish bias to it, and then you break bearish. Okay, we broke this bearish, this structure bearish, all right, then we immediately flip back bullish. That's usually a bear trap. Okay, so bears have been trapped here, and you're likely going to see them holding through this, thinking this is going to pull back and kind of get them out of their position, and they're unlikely to get that happening for them. It's likely going to go into a bull consolidation, and then you're going to see continuation to take the all-time highs, and then price discovery for gold. And if you notice this, we just wicked above the highs. We actually didn't go into price discovery. We're likely going to go very far away from 2075, going towards 22, 23, 2500 an ounce. And we're going to go to major price discovery. So if you're bearish on gold, be very, very careful, because this is usually the sign of a trap for the bears. All right. If we do break down, then obviously we're going to see these lows right here be targeted, equal lows, take that sell side liquidity and make our way back down towards 1750. And to be honest, for that to happen, I would think that the escalations in the war would have to cease. A lot of things would have to go through kind of a cool off period, and I'm not really seeing that happening as of now. Next is silver. So silver right now is fairly similar to gold, but not as impulsive. We didn't take out the previous high here. We did make a higher low, so that's very positive. Overall, though, if you look at silver in a vacuum, its structure is far less bullish, far more bearish comparatively to gold. But I treat silver as a sympathy play, a stunted mover compared to gold because of its use in just industrial use case. So you're going to see gold go up. You're probably going to see silver get dragged with it, but expect for it to underperform quite a bit, because as we continue the silicon revolution, with the solar panels, the EVs, all these things, that all takes a drastic amount of silver, including your phone. Didn't mention that. So they're going to want the price of silver to stay relatively low, especially in proportionality with gold. So be prepared for silver to do well, just not as well as gold. Okay, so now let's go up towards Bitcoin. Yeah, and I say go up because Bitcoin's been up and up. It's been going on up. So let's see how Bitcoin has been doing. So let's talk about it. So if you're in the Lemon Garden, right, you're in the Discord, you're probably aware that I'm long. And if you're in the premium service, then in the swing trades, we're long everything crypto. So we're doing pretty well, So it's been pretty good watching Bitcoin do its thing. And as of right now, what can we expect from Bitcoin? Is the move done from Bitcoin? Are we going to break down from here? Now, what I would say is it's very safe to assume. You don't want to say it's definitely going to happen, because it's all probabilities. But there's a good assumption, because of the probabilities, that we will likely have a pullback. But look for the pullback to have a more bullish bias. And the reason why I say this is because there is no evidence to be bearish yet. All right. There will be evidence to be bearish as we get higher up towards these areas here, towards about 42,000 to 44,000. Then we're going to watch to see if there's going to be major reversals, breaks of structure. But as of now, we haven't had breaks of structure, okay? Since we've had the market structure shift down here, okay, we've only been in an uptrend. And the reason why we've only been in an uptrend is because we haven't had protected lows taken out yet, all right? And here's a clear reason. So we had the break here, protected low right here, break up, okay? Then we made a new low that led to a new high. So this is the protected low. Then we have this low here. Though this low, you could argue, wasn't really a protected low, but it did make a slight high, just didn't close above consistently. But this is a new protected low. Then we break down, protect this low, and then we make a new high. So here's a new protected low. So until the next protected low, this low or this low, both really, get taken out, then nothing's changed. Then you're just in an uptrend, okay? So until the uptrend breaks, don't get out of it. That's simple, okay? Don't let other people's opinions tell you what to do unless the chart agrees with them. That's it. That's all you got to do. So Bitcoin's going to keep going up until it's not. So as of right now, look for a pullback because we are extended somewhat, and we are likely going to see, if we're going to remain bullish, we will likely see a bullish consolidation. Okay, and if we do have a slight, a pretty sizable pullback back to 30,000 and we hold, that's still bullish. We're holding this consolidation and we're going to be holding this fairly large fair value gap here. Okay, so if we hold this fair value gap here alongside this consolidation, this is fairly impulsive. Okay, so we're not really retracing deeply. We're holding the first zone of liquidity, and if that leads to continuation, look for a move going up towards 40,000 to 42,000 potentially. So we may have another $10,000 move up, $10,000 move up from the high we made here. Okay, and if you look from the break of structure on Bitcoin, from where we lost the actual protected low to lead towards this downside right here. So this is the low right here that led towards the break of actual structure, because this pivot right here led towards the new high, which ended up being the all-time high. So let's go from here to here. If we see where the retracement is, right here, you have the retracement going towards 52,000. This is the average retracement, the 50% retracement from this low pivot to the high pivot here, okay? So this would be an average retracement, even in a bear market, to where you come up to here, bear market rally, and fail, and then make a macro lower high to then go and make new lows, or to make slight higher lows, kind of like we did here in 2020 during the lockdowns, where we made a macro lower high from 2017. This was about 20,000 or 19,800, and we came up towards like about 14 to 15,000 or something, and then we break down, and then boom, you have the lockdowns that almost make new lows from the all-time lows, but actually made slight higher lows. Okay, so we may see something similar to that, or the uber bulls are right, and this is the bottom, and we're going to go all the way up. I'm not calling for that. I don't really care. Okay, so if you're trading with me, if you're in my service, I don't really give a shit whether or not we're in a bull or bear market. I just like to trade levels, and I look for market structure shifts. So whether this is a bear market rally or a bull market rally, doesn't really matter. We're long, okay? We've been long. We've been bullish long on Bitcoin since 18,375, and then we've gone, we've gone long here, closed out profit here, gone long right here, literally right here, and then closed out long here, went short up here, closed out long, and flipped long right around over here, and now we're just chilling in the long. So, it doesn't really matter whether this is a bear market rally or not. If the price action's telling me to be bullish on it, then I'm going to be bullish on it. If it's telling me to be bearish, I'm going to be bearish on it. And if it's in a bear market or bull market, it is what it is. So as we get closer towards this consolidation here, okay, so this consolidation here, that's when I would say be on the lookout for any major signs of real failure, of real reversals. Other than that, just wait and see if the lows, the protected lows, continue to be protected. The moment they're not protected anymore, then it's very safe to assume, at least the probabilities will be on your side, that this rally here is likely done. And if it's really, really bearish and we really are in a bear market rally, then look that this was likely going to lead towards the continuation of the macro trend, which is down. Okay, so overall pretty bullish. Let's touch on matic, because matic is a free trade. So whether you're in the premium service or not, I do call out some trades for everyone. So matic is one of them. So let's pull up matic here. So matic is looking pretty good. I really like what I'm seeing here. Very nice clear downtrend, and now we're finally getting signs of that breaking, at least in the short term, right? So, what I like to see is how are the lows looking relative to each other. You're seeing the lows are less and less steep, right? So we have a sign here of potentially the selling slowing down. We also took out this high pivot here, and we took out this high pivot here. So we have potential market structure shift right here. So we have some evidence that we are potentially going to bring in a higher low, maybe somewhere around here, and then look for continuation going up towards the daily buy side liquidity here, or this small fair value gap here. Ultimately, I do want to see it get towards this area right here. So these two wicks right here, where you have a bunch of buy side, a lot of stop losses are going to be sitting here. So this is where I definitely want to see it get to. And if we have a really extended rally, very, very extended, very powerful, then obviously the full TP will be towards $1.50. Now this would be in a very, very bullish scenario, which again, everything's possible. It's all probabilities. We don't know what's going to happen, but we won't be prepared for whatever can happen. Okay, so overall, liking what I'm seeing, and if we do get that validation of the higher low, then we want to look for at least a move going towards 75 cents, but virtually going back towards 90 to $1. All right, so we're looking pretty good, guys. I hope you're enjoying the trades, especially if you're in the swing trade service. And of course, if you have any questions, make sure to leave a comment down below or join the Discord. It's the easiest way to get in contact with me. If you haven't joined the Discord, what are you doing? You'll find the link in the description below. And guys, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.